Nigeria's banking sector is celebrated as one of the economic pillars of West Africa. Year after year, headline figures of trillions of naira in profits are published, celebrated by executives, lauded by markets, and touted as gains of financial sector strength. But beneath the shiny numbers lies a story far more complex, one that touches on currency instability, questionable accounting practices, profit manipulation, unresolved customer distress, and political entanglements. This is the story of how Nigerian banks make money and, more importantly, how they often make it at the expense of Nigerians. In the 2024 financial year, Nigerian banks posted profits that stunned analysts. Combined after-tax profits of the top 9 banks skyrocketed to 4.79 trillion, up from just 1.19 trillion in 2022. GT Bank and Zenith Bank each reported more than 1 trillion naira in profits, a first in the country's banking history. Across the 6 major banks, including Zenith Bank, GT Bank, UBA, Fidelity Bank, Stanbic IBTC, and Wema Bank, profits after tax hit 3.41 trillion for 2024, up 62% from 2023's 2.1 trillion naira. Banks are booked at levels we have never seen before. Gross earnings soared as FX gains and interest income spiked, but the figures marks what's really driving these profits. Bank executives give credits to key drivers, which is high interest rates. The Central Bank of Nigeria monetary policy rate jumped as high as 27.5%, boosting interest income. Foreign exchange gains. With the naira's value plummeting, banks holding dollar-denominated assets booked enormous revaluation gains. Non-interest income, fees and service charges skyrocketed, contributing significantly to bank earnings. But not all profits are as solid as they appear. Much of the 2024 profit surge was due to foreign exchange revaluation gains, accounting adjustments that inflate asset values on paper without delivering real cash or lending capacity. When a bank holds $100 million and the naira drops from 600 naira per dollar to 1,400 naira per dollar, the balance sheet suddenly looks richer, even if no real economic activity occurred. This accounting phenomenon meant that banks looked widely profitable even as real lending to businesses and households stagnated. Further investigation reveals profits being cooked. Some banks reported strong earnings while quietly concealing losses through creative accounting, delaying bad loan provisions, or overstating assets. Zenith Bank trading gains debuted strongly, but underlying credit impairments rose sharply. A bank that advertises robust earnings may, behind the scenes, be masking declining real performance. This creates a dangerous illusion, the appearance of profitability without the substance of real financial resilience. While banks trumpet macroeconomic success, many Nigerians feel a different reality in their wallets. Transaction fees, ATM charges, SMS costs, account maintenance fees, and multiple levels now make up a hefty portion of bank revenue. Customer advocates argue these charges have become a steady drain on ordinary citizens and small enterprises. While banks rake in profits from everyday transactions, they charge for everything from transfers to alerts. You don't even see the profit being made, but it just disappears from your account. Interest rates on loans soared, but rates paid to savers remained low, creating a profit gulf. Borrowers can carry the cost, savers see little return. Banks book interest income but hardly share it with depositors. This structural imbalance has drawn both academic and public criticism. In 2024, GT Bank reported 941,241 customer complaints, resolving most but leaving 7,990 unresolved cases. UBA had more than 3 million complaints with over 1 million unresolved. These figures expose an uncomfortable truth. Banks may profit enormously while customer service falters. These are not minor issues, these are millions of transactions gone wrong, complaints ignored, and trust eroded. But why does this persist? Experts suggest that while the Central Bank of Nigeria issues guidelines, enforcement is weak, especially on charges and customer treatment. Critics argue regulators have struggled to balance oversight with industry interests, allowing banks to prioritize profitability over consumer protection. Not all controversies are recent. Some cases, like the Innocent Group versus GT Bank disputes, span over a decade, involving lawsuits over financial obligations and accusations of delayed payments, even as the bank consistently reports profits. Other past episodes, such as the 2009 banking crisis triggered by risky lending linked to stockbroker Peter Olulo, remind us that profitability and stability are not always aligned. As Nigerian banks celebrate trillion naira profits and parade them on international markets, the deeper story remains obscured. Profit builds on paper gains, everyday Nigerians charged to debts, regulatory weaknesses, and chronic complaints. The challenge for Nigeria's financial future is not just profit, it is purpose. So, are Nigerian banks engines of national growth or machines of extraction masked as prosperity? Only time and transparency will tell. So if you have enjoyed this video, kindly like the video and also put on your thoughts in the comment section, and don't forget to like and put on the notification button so when next I drop a interesting video like this, you will be the first to know. Thank you for watching.